Hey, welcome to the Closing Beat, everybody. Happy Wednesday. How you doing out there? All is good? Everybody's having a good day? Don't worry about that noise in the computer. It's just the computer, heating up, thinking about what it wants to do. Don't worry about it. It'll go away. Hey, we're financial advisors here at Jazz Wealth. Welcome to the Closing Beat. We got a little bit to cover today, so we're going to do this. Wine and Wealth, Thursday nights for our clients. Just a friendly heads up, that'll be tomorrow night. I'm thinking about covering the difference between tax losses on crypto, because that's going around right now, and NFTs. They are totally different things. In regards to the IRS, you do have to take two separate steps in order to legitimately realize the losses in your crypto or NFTs, just whatever you have there. So I'm getting that question a lot, and yes, there is a process you got to follow, so I think we're going to cover that. Last week we did how our funds work, and the week before that we did an open house. You want to see how it works on our Wine and Wealth class? Go check us out. It's on YouTube. You can actually look at our class there, and held nothing back. We did it just like we always do, with a glass of wine and, just helping you out, get your dough straight. Our FinTips videos today, Eric, we can see it on the bottom of your screen there. It looks just like the Dave Ramsey thumbnail. That's thanks to Cody. Eric throwing a little bit of shade at Dave Ramsey there, but not the typical way you would think. Obvious conflicts of interest there, so it's always bothered Eric. I said, I don't know, man. I don't think you want to do that. And he's like, well, it means a lot to me. And I'm like, okay, be ready. Anyway, so check that out if you're interested in that one. We're just generally doing like good faith, educational, transparent type videos as marketing, right? So what's more transparent than that? I'm telling you that we're here marketing by teaching, and I hope you keep us in mind there. Also, if we're on the phone together, which I'm pretty much wide open lately, but if we're on the phone together, I realized a couple people asked me today, you good? You got to go? And it took me a second to realize that. I might be talking too fast and making people feel like we're in a hurry, and I apologize for that. I get excited, right? We start talking about strategies and plans and stuff, and I just start firing out words and thoughts and ideas. I don't have anywhere to be. I'm always here, so you can check us, take your time, right? You don't have to worry about that one. Anyways, let's talk about the stock market here today. We're going to go over to the S&P 500. I'm using the futures market here to take a look. It is a below average day. We'll go like this, SPY. We got a below average day here and below average volatility. This is a very dangerous market for some of you. Take a look at this here. The S&P 500, I'm using the SPY here just to keep it uniform. Here is this is the actual volatility plotted on a chart of the S&P. So this is not the price of the S&P. This is just the volatility, day-to-day volatility. And what I mean by reduction in volatility or less volatility, see right here? Imagine this I'm going to just change it one little thing here and replot it like this. Okay, imagine this being the volatility. It is increasing, right? The higher we go, the more volatility there is in the market. And since we've been in the beginning of the year, volatility has just been expanding, meaning the action, the day-to-day whipping around in the market. That's what we have. Well, anyways, look right here. The volatility is not pulling back yet, but it is calming down. See this over here the last couple days here? All of a sudden we have smaller ranges. We're starting to just get into that summertime doldrum, quiet time period. Stubbornly, I would say, the market is not just diving headfirst into it and just quieting down right away. It's been a little bit stubborn. But I'll tell you what happens here is the active trader, they can get into some trouble, right? Those of you that are in the market day to day, you get in a little bit of trouble because what happens is you are now used to moving faster. Have you ever been, as a kid, I did busboy and I was a server for a little bit. I shouldn't have been, but I did that. And you get to work, 3 o'clock or so, and it's not very busy. When the main dinner rush time hits, all of a sudden, it's like minutes are going by quickly. You're in the zone. You're moving quickly. You're picking up the plates and stuff and moving around, taking orders, getting it out there, making people happy. Well, then when that's over, now you go into 10 o'clock, 11 o'clock here in Florida, all of a sudden the rush has died down. You're still moving faster, right? Because you're in that zone. You're moving along. It takes a minute to slow yourself down. Very dangerous in the stock market because while things are zipping around, moving, and you're watching everything and taking profits and getting out and stop losses and all that, well, when the market slows down, if you keep buying stuff and moving around, all of a sudden, there's not as much activity. All of a sudden, you're moving too fast. You're buying and selling too fast. That gets you in trouble. That'll chop you up. I'm telling you, if you don't know what I'm talking about, wait for the day you will do it. Every single person has to do it at some point there. Anyways, the volatility in the stock market is also dying down in individual sectors. So we could I'll use the ETFs so you can use them too if you want. The XLY using consumer discretionary, that's going to be an orange back here. It is calming down like the stock market. Consumer staples just came to my mind because of consumer discretionary. It is also calming down, right? So we had a lot of activity and then really, really calming down. If I get rid of those for a moment, not everything is like that. I can just tell off the top of my head. Energy is not going to be like that. Aha, right? So we're still volatile. We're not going sideways here. We've got a little, that's not the right one. Let's go over here real quick. I did XLE. There it is. So we're not going sideways yet. It's the same thing, but it is still popping, taking a break, popping again, taking a break, popping. So the volatility and energy as expected this time of year is still there, probably utilities as well. Yeah, same in utilities, still expanding volatility there. So it's not everywhere in the market, and maybe that's why the market's stubbornly trying not to go take its nap for the summertime like we would expect it to do. But nonetheless, that's what you have going on there. Also, I am told it is a birthday today. Are you aware of the birthday, Cody? No. Do you know whose birthday it is? Huh? Come on, don't be shy. No, it's the iPhone's birthday. Yeah. It's the iPhone's 15th birthday today. I wouldn't have known if you didn't tell me. I'm sorry. I just wouldn't have came to me. But the iPhone actually turns 15 today. Get its driving permit and all that stuff. 52% of revenue. I just wanted to find some stats for you instead of saying, oh, it's 15 years old. 52% of revenues come from the Apple iPhone. That's down from about 70. For a while there, hardware was a big area of their revenues. Now services is taking over. All the crap that you buy on your phone and stuff, they get a piece of that. So that's, of course, fine. A little bit of revenue source there for them that's getting bigger and bigger. Since the iPhone launched 15 years ago, Apple has actually been the 5th best performer in the S&P. And I could have guessed Netflix as being a better performer leading up to, or from 15 years ago. I probably could have guessed that one. I might have guessed Amazon, which these two are, in fact, better performers than Apple since 15 years ago. I would not have guessed Dexcom in the S&P 500, and I would have not have guessed Regeneron Pharmaceuticals. All those 4 stocks are the only 4 stocks that have better performance than Apple. And by the way, that's even with Apple's 4,000% gain at that recent high there. I was at they gained 4,000%. So, wow, interesting there. Now, if you look at Apple today, there you go. We're still working on a pullback. We're still in the middle of a downtrend there. Apple did put up a positive day today ever so slightly, over 1%, not too bad there. But big tech did its thing today, right? What happened in the market today was big tech did mostly what it needed to do, with the exception of Alphabet and some of the semiconductors like NVIDIA. That one did not do what it was supposed to do today. But what happened today is you got big tech. Okay, cool. We got one big chunk of the market. You know that because I've shared that with you, how the market's broken down. Then we have bonds. So bonds moved higher. That's a good thing, right? That means interest rates move lower. Works in inverse there. So bonds started moving higher. A more stable attempt at putting in a low for bonds is a good thing for the stock market. You had oil moving lower. Maybe you're invested in oil, but as a consumer, we'll take it. I'm happy to see the price of oil falling. Maybe the first sign of a lower high here in oil, which would be a little bit odd, given the season that we're in, but so be it. So very, very helpful things in the market there. We just didn't have every stock come along and play. So all day long, you see the stock market wiggling around by its flat line there because it had the support of tech. It had the support of bonds moving higher. It had the support of oil moving lower. It just didn't have semiconductors and energy and banking stocks and some of the utilities and basic materials and industrials. The rest of everything else just said, we're tired. We're not going to do anything today. And that's what you have going on in the markets there. So rather interesting. We'll see what tomorrow has in store. But I wanted to show the volatility and the volume because that's important. You will get a little bit chopped up if you get in some keep moving fast there. What else do we have here? I want to point out real quick healthcare. I'm going to use the XLV, right? So look at the XLV. It's what we think about these healthcare stocks here. Big rally. The XLV had a 7% rally over that 6-day period. From these lows to the 50-day moving average. Remember, I pointed out mean reversion was the fastest in healthcare. Every other sector had either not quite gotten there yet or was behind. And so that beats the stock market, this rally in healthcare. The sector itself is in fourth place year to date. The only other sectors that beat it, you'd have guessed, energy, utilities, and consumer staples, because I've just shared that with you. And if you look inside of there, you'll keep hearing people say healthcare, healthcare, healthcare. Well, if you start looking at the individual stocks, you may be enticed to buy something there, right? Moderna, it doesn't look like much, but that's 9%. It's because it's been beaten down so much there. Anthem, come on, you can do it. It's going to come up here. That's 8%. It's not going to come up. We'll move on to Edward Life Sciences. 6%. United Healthcare. I'm trying to be diverse here and not just focus on one area of healthcare. Look at that. Not as weak as the market. Much stronger on all the bounces there. Cigna was another one. It's up 6% there. Going over to like Eli Lilly. Look at that. Relative strength sitting at highs there. Pfizer, also something similar, about 6%. The reason I point this out is because when you see a rally like that, it is not time to chase it. It's time to build a watch list. You go, am I interested in the healthcare sector? And if I am, can I go find some stocks that I may be interested in buying? Can I build a watch list? Now, the reason, if you're a research member, the reason you can see that it is not time to buy the healthcare sector, take a look at this. This is in our research site here. What I did is a really simple calendar search. I said, okay, well, we had a 7% rally in healthcare, XLV I used. And I said, how often have we had greater than a 5% rally in a week looking back 30 years? It's happened 34 other times in the last 30 years. Basically once a year. So boom, we just got our once a year rally. Going forward, there is a perfectly flat line in terms of performance. Chop, chop, chop. Just back and forth there. Median return, negative 0.5% basically. It's only positive 36% of the time out of all these other events that have happened. And then if you're a research member, you can, all the data's there. You can export it, have fun with it, do whatever you like. So looking forward now a week, we don't expect much. So why would I chase that? If I know, remember, this is not to say that this is what's going to happen. This is finger in the wind. Right? Whenever that happens, what's the temperature like outside? Is it going to happen again? Is that the sign of momentum? Should I be excited? No. It is the beginning of calm. Just wait. There's nothing to be hurry in about, right? All the people that see stuff take off and they go, I got to be in. In this case, it's time to sit back and just go, well, let me find something interesting that I may want to buy if it either is calm for the coming week or maybe if it pulls back a little bit. I would prefer the pullback. So do we have some stocks we can look at here? I put together a little list. These are not recommendations. These are ideas to get you to start thinking about, well, yeah, I like those kind of plays. I'm interested in that. Here's one of them, AbbVie. It's a break of a downtrend. So it was in a downtrend, and this most recent rally, it did participate with the sector and the market, so that's good, and it broke the downtrend. If you like looking for stocks that have pulled back and your requirement is that you buy them once they pull back from breaking the downtrend, well, this goes on a watch list. I don't know that it pulls back for you, but if it does, that fits your criteria. Maybe you'd want to look at something like that. Bristol Myers. Well, first of all, this is one of the stronger stocks in the group. We can see that. That's not my opinion. That's just fact. And it broke out. A lot of people like to look at breakouts, not to buy the breakout, but to buy the pullback. I was always one of those. I want to see everybody take the risk on the breakout first, and then I'll come back if it pulls back. If it doesn't pull back, I'll let it go. So there you go. If you like pullbacks and breakouts, you've got one. Humana actually was similar. It's just not as clean. There's a breakout. See, it moved to new highs. Maybe it takes off without you, but maybe it pulls back. If it pulls back, you've got a stock that you put on a watch list and you come back to it. Cigna. We just talked about this one a second ago. Is relative strength and holding at highs. So this is a longer watch list. Maybe you don't want to buy it if it breaks out. You say, I'm going to wait for that pullback. Maybe you're a breakout player. I just wanted to give you guys a handful of stocks to put on a watch list, and you put them on your watch list based on what fits your eye and fits your portfolio. More importantly, might fit your investment plan and things that you're focused on there. So it's not a sector that gets talked about a lot. I just wanted to share that with you, and hopefully that helps. All right. Well, there wasn't much today. New highs and lows. One new high, 18 new lows. General Mills was one of the new highs. Really good earnings. If you're familiar with General Mills, everybody's familiar with General Mills. They make Cinnamon Toast Crunch. I actually can't eat Cinnamon Toast Crunch anymore. I found that out the hard way. Old El Paso in the pet market. Remember, they're into pets now too. Blue Buffalo. They own Blue Buffalo, and they own the second best mass-produced cookie dough on the planet, Pillsbury, and other bunch of names as well. Kix and Honey Bunches of Oats, all that stuff. So cereal, pet food, and cookies. Think about it that way, with some salsa and other things there. Anyways, North America, they break it down into segments. North America retail segment, sales were up 11%. I put down year over year, $3 billion. Pet segment, which is Blue Buffalo and a couple others, sales up 37%. Well, now you get that. You know why they're cheering a little bit for that one there. International was the only weak spot, which has been for a lot of these guys here. Fell about 21%. Their margins were up 8%. Doesn't sound like a lot. General Mills is a very large company. 8% increase in margins means $1 billion in revenue for the quarter. $1 billion, right? Cool $1 billion. So when you look through the headlines when people, the margins were up 8%, what does that mean? That means another $1 billion. That's what these people are looking at, right? They go, oh, okay, margins are up 8%, right? All the headline readers that just move on about their day, that's fine. Everybody else goes, oh, wait, that's $1 billion. That means the stocks were $75, right? That's why you saw General Mills moving as high as you did today. Moving on. Under Armour. Come on now. That's it. I can't type today. So Under Armour hit new lows here. Remember, on Under Armour, that was one of the worst performers. We talked about this yesterday, 7 months of bad luck, 60% lower, and now even further than that, down 7 months in a row. It's just not looking good for them, but that one did hit new lows. Carnival Cruise, I got this question a lot today. What's the matter with Carnival Cruise? There was an article, an analyst actually, that said worst case scenario, $0 for Carnival Cruise. Well, sure. Worst case scenario for Under Armour is $0. Worst case for any stock is $0. The only thing we've ever seen go negative is oil, right? So, yeah, okay, that's a nasty thing to say about a stock. It's moving to new lows there. That's basically all that the focus was. I would add to that so that this isn't just like a headline review type video. They have a lot of debt. Carnival Cruise may need to borrow more debt. Well, they used to be able to borrow that debt for next to nothing. It's a whole different world now. If you get yourself in some trouble and you need to raise debt, it's going to cost you more than 100% more than it just did at the beginning of the year and before that, of course. So that sticks out there as probably one of the big problems there. Also, semiconductors, AMD hit new lows there. NVIDIA, already talked about that, hit new lows. Micron, we talked about yesterday. Oh, looks like it's going to hit new lows there. So the weakness continues in all semiconductors today. By the way, if I do Texas Instruments, Advanced Dialogue, Qualcomm, Intel, it doesn't matter. They all had a rough day today. So that's that. Stocks in the news. Let's talk about some of the stocks in the news today. Bed Bath & Beyond will be first up on your list there. Bed Bath & Beyond, worse than expected earnings, and they got rid of their CEO. They're also willing to sell Bye Bye Baby. It sounds like they wanted to do this, and the CEO put up a fight. They got rid of the CEO, and now they're in liquidation mode. So it really negative day for them. That's what the gist of all of that is they're willing to start liquidating some stuff. They may be in more trouble than we think they are. I don't know. I'm just saying that's where it's at. Disney, the CEO gets a 3-year extension on his contract there. The board did agree to that. I disagree with the board, but that the stock was flat. It wasn't like it moved based on that news or anything, but that is news for that stock. Intel, some of the news that hit the semiconductors today. Barron's actually had an article that says these guys should cut their dividend so that they can spend more to grow and to keep up because they're a little bit behind the game there. So the stock was a little bit lower. I don't know if they even need to do that. They've got enough money. Tesla down 2% basically on the day there. They've laid off 200 workers in the autopilot division there. I don't know what that means. Is it that they already have used them for the development of it? Because it seems like it's pretty good. Maybe they don't need that many people there, and they thought, well, we can trim a little bit of fat there if things slow down. FedEx is in the news there as well. They think that between Now, in 2025, we can see between 14 and 19% annualized growth. Create a little volatility there. We're just not believing the comments that they happen to give there. They had one of their investor meetings there. That's where the news came from. Other than that, tomorrow you got Walgreens, Constellation Brands, and Micron for earnings there, so the excitement is not over as far as that goes. You got a little bit of changes going on in the S&P 400 with some different names making their way in and out there. And that is about it. Yeah. Anything to add over there, Cody? Great show. Great. Yeah, thank you. Thank you. All right. I would take your questions, but this is, in fact, a premiere today. So sorry. We'll be back tomorrow to do this all over again for you. And I hope you enjoyed everything that we share. Trying to put together some different things. If you have something interesting that you would like for us to research, put together, or whatever, if it's a possibility, we will do it and present it on the show for you and give you credit for it. So let us know. We do look at the comments there. Enjoy the rest of your day. Thanks so much for watching. Adios.